please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But let's move on, because the market right now is seeing a bit of volatility, especially in the mid-cap space. We have Dharmesh Mehta also joining us, MD and CEO of Axis Capital. Dharmesh, good afternoon. So the markets absorbed the blow pretty well, you would say.
I think so. The long-term capital gain tax was coming, so it's not suddenly that you've been shocked.
Yes.
So at least there was a fear of this coming in, and it's finally come true. So somewhat it was an expected kind of a line, but obviously it's not something which people wished for, but we have to live with it for another 1 year.
We have to live with it for another 1 year, you know, the market reaction in the mid-cap especially, Dharmesh, because that's where the problem has been. A lot of people thought that, you know, there's been a lot of profit taking ahead of budget on mid-caps, and that's continued even today as well. So your thoughts on what's happening here?
See, also remember the amount of investment which was coming in the domestic funds. Part of them was going into the mid-cap space. Yes. Now you've also got the domestic funds into the same net. There's a dividend distribution tax added onto it. So you may see some kind of slowdown in the mutual fund segment. If that happens, obviously the mid-caps will be affected the most. And if you look at the valuation perspective, the large caps are actually fairly valued. So in that sense, people would be focusing more on the large caps now, for playing a safety thing kind of a game, because you're now back to global volatility, oil prices, which is not under our control. So clearly markets is now looking forward more for safety and defensive rather than aggressive bets.
Okay. Dharmesh, stay on. We have SP Tulsian of sptulsian.com also now joining us. Ms. Tulsian, good afternoon. Okay, we'll get to Ms. Tulsian in a bit.
Yeah, so my question to you on this was, I mean, initial, obviously, phone calls have all been made. Everybody's wondering, the one question on everyone's mind is, will mutual funds see a little bit of a let-up of those inflows? I mean, that big monthly figure that we were getting. And then what next for this market? Because those flows have been extremely important in our journey till 11,000. And
especially coming in this year, which I believe will be the largest fundraising year for India. So in that sense, definitely the domestic flows is needed in a much aggressive manner. So that is the reason I'm a little disappointed with this whole tax thing, because you're not going to gain much, but you're actually going to now put a speed breaker on the equity markets, which was not needed, especially when such a huge amount of divestment target is there, plus money raising was going to happen.
But the other interesting thing, Anuj, and your thoughts on this as well, I mean, the market got two blows, right? It got the LTCG blow, and it got another fiscal deficit blow. I mean, if it wanted to react negatively, it could to 3.3%, because it's a minor sort of a slippage. It's chosen to digest both of these blows very well today, you'd have to say.
Fiscal deficit, I don't think, mattered at all, Surabhi. You know, the kind of conversations that I had with fund managers and market men, because, at the end of the day, it's also a lot about arithmetic. The finance minister is talking about 80,000 crores of divestment, for example, this year. We all know that this year it was 20,000 crore more than budgeted. So, he could spring a surprise.
That is one jugglery, so one cross-holding change, and you can meet the
I think the market was willing to give them benefit of doubt on fiscal deficit issue. That's not a problem. I think the way it's been done, designed, the grandfathering, I think that's allowed this blow to be softened a bit, and that's why I think you're seeing this kind of move on the market.
Sure. Dharmesh, then what next? I mean, we are where we are, as you've been talking about, this discomfort with mid-caps that exists. So let's talk about, let's say, 6 odd months at least for this market. What next?
I think so. Now we are back to the global markets, because India is not a standalone rally. It's been part of the entire emerging market rally, and if you look at entire emerging market this year, India has been a little bit underperforming. So it will all depend on what the global markets happen, especially what happens to oil prices, which is a huge impact on India. If there's a softening of oil prices, India will be safe. But clearly, the low-hanging fruit is gone, and now it's going to be tougher to make money in this kind of markets, and especially now, where a little bit of the equity mood has been dented. I think so, markets will take a cautious approach going forward.
Okay, stay on, Dharmesh. Let's